Yes. Okay. Well, Art Laffer
Yep.
was one of my professors at the University of Southern California, introduced me to Capital Group on the West Coast. Capital Group at the time, and still, I believe, was the best research organization in the asset management industry, I believe. And so I got there, and one of my first projects was to work. So now this is going to date me, and that's fine. I'm proud of my age. So I was in college when I started at Capital. It was 1977, and
Year before I was born.
before you were born. And my first project was to work on Hong Kong 1997. Think about that 20-year time horizon. And I thought to myself, I love this. I mean, the world is my oyster. We get to learn about how we get to paid to learn. That's unbelievable. So I fell in love with the business back then. And I've seen the arc of our business. And what I mean is not ARK, I mean ARC. So back then, there were no computers, no wireless phones, nothing. We barely had whiteout. That's how primitive we were. And we hit it at a perfect time. It was 98, 99, 2000. And my partners, whose family's fortune this was, decided, okay, we had tripled their money, and, we weren't going to build out institutionally. So I went off to Alliance Bernstein, the first portfolio manager brought in from the outside, mostly because of the way I've always done things, starting from the top down, and being as bottom-up stock research driven as any other team out there. But they wanted someone who had more of a macro orientation and just came at the world from a bit of a different angle. So I was there for 12 years, head of global thematic strategies. But this movement towards passive was intensifying, especially after 0809. And I was becoming more and more of a different duck. And I realized that I would probably need to leave, and did for that reason, and start my own firm.
Wow.
And get back to bringing real research into the investment process, and meeting and fulfilling an unmet need out there now. It's unbelievable what's happened in the last 20 years, how much research has disintegrated. And those indexes are not going to be a good place to invest. Now, what I'm fighting here is history, because as that 20-year phenomenon took place, it became a self-fulfilling prophecy. The more people investing in indexes, the better those indexes did.
Right. Okay.
So we've had our first breakthrough, though, with the FANGs. They're breaking down. And those were the biggest companies in most large cap benchmarks. They're breaking down because of disruption. TikTok is wreaking havoc. And so that's the first case in point. Watch out.
So the FANGs are breaking down. We've seen the disruption in social media a little bit more. What are the particular challenges that someone like Amazon or Google will have? Is there like a limit to how much Amazon can actually build and create?
So Amazon is not a social network, and it does seem like social commerce is growing in share.
Right.
So it's not a social network. It will become, it's not going to disappear, of course. It will become like the Walmart of online retail, is my guess. And Walmart's been a decent stock. It's not a barn burner, but and they of course have AWS. That's facing a lot more competition from Google and Microsoft. I was reading an article about their efforts in metaverse yesterday. A reporter, I think it was the New York Times, not quite sure, maybe it was Bloomberg, was saying, okay, I need to learn about this metaverse. And you could tell there's a little bit of a movement stirring, but, the hardware is a real source of friction. When we think about the metaverse, what's the first metaverse experience I've had? It was Zoom. except it's with our real faces and not avatars. Some people enjoy not seeing other people and living in that world. I don't think it's going to be as mass market as any of their current products. I think it'll be interesting to see how they weave, NFTs into the ecosystem. Yassine and I were speaking on the way over about artificial intelligence and how, with the creator community, I mean, AI is going to do some mind-blowing things, and NFTs and AI could be a beautiful match. Facebook's advanced in artificial intelligence, and but when you say Hail Mary, I would say this is going to take years for them. I think as the negative network effects associated with Facebook evolve, it will be very difficult for them to make that up with the metaverse. This is before COVID and all the supply shocks, this year or next year. And, these are better cars and they're more environmentally friendly. They have a lot going for them. So we are always surprised at how long it takes others to see that this world is happening. And the reason is the way that our financial markets are set up. Auto analysts were supposed to be the analysts on Tesla. Well, they are analysts of internal combustion engine machines, right? They're not the right analysts. We need battery analysts. We need robotics analysts when we go to autonomous. We need artificial intelligence analysts, and you need them all to collaborate. That's anathema in the traditional world. There's a lot of turf warfare around stocks. No, it's mine. No, it's mine. Well, there's going to be a lot of that in the innovation space because of all of the convergences between and among the different technologies. So I think the surprise to me, you're going to win.
I hope so.
Oh, you will. You will. And we do the same thing, but we perhaps do something, maybe you do this. We average down and concentrate into our highest conviction stocks. Now, if you only have two assets, you and Bitcoin, I guess that's a little bit more difficult to do. But we started out last February 21. We had been up 360% from the bottom of the coronavirus to the peak in our peak in February of 21. And during that time, we expanded the number of stocks in our portfolio because we had been highly concentrated at the bottom in COVID towards our highest conviction names. And so we went from roughly 33 names to 58 names. There were IPOs, there were lots of exciting opportunities. And then starting February of 21 to our low in May, and we think that's the low, but we're getting close there again. You never know. The Fed, I do believe, is a big menace here. We were down 75%. Think about that. Up 360, down 75%.